G'day, Chris.
Yes, good. Thank you for taking my call.
Pleasure.
There's a little problem that I'm having with banks at the moment. When the last interest rate dropped, just before it dropped, I started trying to change the banks that I was with, because I wasn't happy with the service and I wasn't happy with the interest rate. So I'm with St. George. So I went to NAB and Commonwealth, and I was sort of tossing back and forward, seeing what interest rate I was going to get. So in the end, NAB gave me a better rate, so I tried to go with them. And before I got I had 3 properties plus the home. So just before everything was to be signed, they said, "Oh, sorry, we can't give you the loan because you're $700 a month short on your income." I said, "But I was paying all those loans when they were 2% higher than they are now. How am I short?"
Yep. Okay, Chris, what's happened is, of recent times, the regulators have put some pressure on the banks, saying that their qualifying rate, in other words, you might be paying it at, say you're paying it at say 3.99% for argument's sake, or 3.89%, whatever it might be, right, or 3 point something percent, your interest rate. The regulators have come out and told the banks, saying, look, as a result of interest rates being relatively low, we want to make sure you guys stress test your borrowers and attach a benchmark rate of qualifying their loan if rates are to increase. Now, the current average qualifying rate that the mortgage insurers use and that the major lenders use at the moment is on average 3 to 3.5% higher than, so it's almost double or thereabouts than what you're currently paying. And the reason that is that they've had pressure from the regulators, mate, to saying, look, we want to make sure you can qualify these people somewhere between 7 to 7.5%, somewhere in between there, because the blended average over the last 100 years in Australia, mortgage rates have been hovering around that 7% mark or thereabouts. So therefore you need to qualify them at that. So that happened a little while ago. So that might have been in the transition phase when you would have been applying for that loan. The other thing is that some lenders, in addition to that, have actually reduced their qualifying criteria, where historically, I mean, I'm not quite sure what you do for a living, Chris, but in your role, is there regular overtime, or do you,
No.
on top of your base, do you get a base salary?
Yes, right.
So on top of that, are there any other allowances or anything like that?
My son pays rent, so that's about it.
Okay.
And all the incomes that I get from the properties.
So you've got your salary plus your son's rent and the other properties, is that correct?
That's right.
Okay. What you'll probably find is, under this qualifying criteria that I've just told you about, they've looked at ways of reducing the amount of exposure that they're exposed to people with investments and along the rental appraisal side of it. So what you'll find is they probably would have discounted the rent from your son. They probably would not have taken that into consideration, and they might have even put on top of your existing loans a buffer on top. If your repayments were only X, they would have loaded that up to make sure that if rates do go up, that you can still afford those repayments.
I understand all that. May I just say something?
Yes.
Yeah, that would be fine if I only have one loan, or my home loan, right?
Yes.
But it's investment properties. If interest rates go up, there's always possibility I can sell one of them,
Yes.
and my problem is solved.
You are
right?
you are dead right. Yep.
So if I was paying those loans at much higher rate than they are now, I can afford to pay them now.
Yes, you've demonstrated that. Now, there are lenders out there.
What they've really done to me, I couldn't go back now to the third lender and start a stick. And another thing, they, by stealth, you know how now you can change banks without being penalised?
Yes.
Well, now they're using people that come to you and get you to sign up with them, and they'll get you the best rate possible, but you have to sign up for 2 years.
Now, what that is, Chris, so we don't do any of that, by the way. So you can come to us, we can do the refinance for you, and you can pay it out whenever you like. What it is, in the industry, there's things called clawbacks. So what it is, they get paid to do the work for you, but if you pay out that loan relatively quickly or sooner or discharge it, whatever they've been paid by that person, by the lender, that lender then claws back that commission payment that they might have paid that person to do that loan for them.
They are reintroducing again that you can't change the banks as you're really supposed to.
That's very unusual that's happened to you, Chris. I'm happy to take this offline if you don't want to mention who it was or how that happened, and get your details if you go back to Andrew and the guys that from when the calls came in and really look into that for you. But you are not obliged to sign that, and they should not be charging you that you should not be signing that document saying you'll pay that back if you pay it out sooner. So a way around that, Chris, might be also to pay out the loan. That only gets triggered if it gets discharged anyway. So there are a few ways you can work with that. If you want to give the guys a call in the office on 133 AMO, which is 133 266, they'll probably answer a lot of these questions for you, and they might even ask you some sensitive information like your income, and actually within 2 minutes, not even, work out the actual borrowing capacity for you, because they've got different calculators that they can use through different lenders. Just because lender A, being where you went to the NAB, didn't qualify, doesn't mean that lender B has got different lending criteria, and therefore you might be able to qualify through them. So we have got different lenders where they've got different lending criteria that we adopt. So what you'll find is that if it doesn't suit one, there's always others that we can go to. So hopefully that helps you in some way. And if you're happy to stay on the line and go back to the guys, we're happy to give you some in-depth, unbiased details in regards to your way around that.